What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 31st of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to try to start asking a big question, and it's one that I know is on the minds of a lot of you out there within the crypto space, those of you who trade in equity markets, and it's when are we going to arrive to a bottom in this bear market? We've clearly seen over the past half month here into the later half of August that a lot of the gains that many people thought were potentially the beginning of a bull market, a new rally in market valuations, turned out to be a relief rally, something we'd been hinting on as far back as mid to late July as we started to churn higher. So I want to go ahead and spend a little bit of time to talk about where we can start to expect a bear market bottom and a start to a new bull market, which is what everyone is very excited about. Just to let you all know, this video is brought to you by the Dash Report, our newsletter here on the channel. More on that later on in the conversation. So I wanted to go ahead and just try to answer this question because the charts have become increasingly difficult for I think a lot of people to navigate here. Right when, for example, Bitcoin starts to get up to this point here at around 24,000, the momentum is strong going into testing these higher levels here. We've really got this kind of gap period essentially where a lot of the valuation decline happened. And many people just think that we're going to start turning in the opposite direction, chasing towards those moving averages and starting to churn higher. That's at least how most people have been trading the market. And during all of that buy-side strength, people taking advantage of the discount in price, we've had a lot of sellers weighing into that buy-side pressure. And that's exactly what we saw here time and time again here. Someone was offloading key positions at around $24,000, and they continue to do that, meaning that there is someone out there with a lot of Bitcoin who wants to sell at this range, and that is pushing price lower here. There's someone out there who's got a lot of Bitcoin, too much supply on the market that's weighing things down. That likely means we are not only going back down to the lows here, maybe not tomorrow or in the next few days, but over the next couple weeks and next couple months as we step in towards the fall and winter and into 2023. Let's take a look at Ethereum here. Same exact scenario, right? Lower highs, lower lows versus the upward trend signs of higher lows and higher highs that we had going back through mid-July to mid-August. Nice month of upward price action. We talked about taking advantage of that strength. We had trade setups here where we said you could buy in on the discount here around $1,400, ride the wave here towards $1,800 to $2,000. And since then, again, we are now treating what was previously starting to become new support yet again into new resistance. And that means we are likely going to, over the next couple days and weeks, charter towards those lower levels. Now, to going towards this question of trying to figure out when there's going to be a bottom in asset markets, we can't simply look at what's going on in crypto markets. In fact, I would actually advise or encourage that you start to look at equity markets. That's at least what I'm doing. And the reason why is because the equity markets are going to tell us much earlier on than crypto, seeing as it's a less riskier asset in regards to the kind of risk and reward profile that you have investing in it. And if we are going to take a look at equities, we need to start doing some technical analysis to try to understand where things could be heading. Now, I want to go ahead and take a look at some of the major indices here. The big one being the Nasdaq. And the reason why the Nasdaq holds a lot of weight, while we also do value the S&P 500 and the Dow Jones, the Russell 2000, these are all major indices that measure large chunks of the stock market. The Nasdaq is incredibly important because a large component of its valuation and therefore its up or downward performance has to do with technology companies. And not just any technology companies, but I'm really talking about the big tech companies. I'm talking about the FANG stocks, your Facebooks, your Apples, your Amazons, Netflix and Google, Tesla, all these major companies that really make up a large chunk here of the Nasdaq. And these were the leading companies in this previous bull market. Now, the reason why that is significant and important to understand before we even dive into the TA here is that it is important to understand that market leaders are usually going to get hit the hardest during a bear market unless they can retain being leaders for the next cycle. And we'll talk about this topic of leaders as we go through the conversation. But essentially speaking, usually the leaders of the previous bull market are no longer going to be leaders the next go around. They have had their time. They have had their time to shine. They've grown. They've seen exponential growth in revenue and fundamental values, but have started to stagnate. And this is something that we talk a lot about within the Dash report. We wrote about quite extensively in previous month editions. And on top of that, we build on further here, the technology sector being the lead here. But understanding that here, there are some clear surface level signs here that there's weakness in the market, going more towards this question of whether or not the bear market is over. And our opinion is that it is not over here. We talked about extensively back here in July and August that this was a typical bear market relief rally, similar to what we saw back here in March. And we saw one of the worst things that we could see here at a time when the bulls needed to shine. Right when price had gotten into the pocket of the 200-day moving average and the 200 EMA, with the RSI starting to get overbought here, we needed the bulls to do something big. We needed to see them charge through and showcase that they weren't worried about inflation or Fed monetary policy. But of course, they weren't able to do this because this was nothing more than a relief rally. Not many people were buying here. Rather, people were starting to take profits. And what we saw, in accordance with this line of previous resistance, as we broke through it, we fell right back below that line of resistance and outside of the 200 EMA, this orange line here. And this was the ultimate red flag here, as I've got indicated on the chart. The reason why this was such a big red flag is because it's a typical deviation. When you deviate from the trend here, essentially, going above that resistance line that many people think, this is the time to shine. This is where bulls really should be breaking out price and breaking away from that previous trend. When we deviate back into the trend, right, we start to go back under those moving averages yet again, where we should be taking into account, we should be making them support. When we can't do that, that means the bears are dragging you back down, and you are likely going to be visiting back down to the previous lows, if not worse, just like we had back here in March through April, as we started to charter down into new lows into May and June. So I expect, again, although we're going to see how prices hold around this range, we've got to expect that this is going to continue to charter down. Let's take a look at that S&P 500 here, right? So as we take a look at the S&P 500, we weren't able to hold some of our levels here that we indicated on the chart here around 4150 and also here at 4225. And again, the key thing here that I want to focus on, I'm just going to go ahead, remove these drawings here, focus on what we were talking about extensively in the Dash Report group, right? As we were talking about, as we approach these moving averages here, it was seeing whether or not we could clear through this line of resistance, make it support, and start to break out higher. Essentially, continuing the trend here, getting above, holding a support, and breaking out higher. If that happened, then our thesis of a relief rally would be wrong. That we would admit that we were completely in the wrong there and that it was time to get on the train, because once that would happen, if we were to get that, we are likely to get a continuation much higher here, where essentially we make support and start to get back towards the previous all-time highs and whipsaw higher. And there was some leading plays here that were starting to maybe potentially push the narrative in that direction. Apple was completely bucking the trend, essentially continuing to charter higher here, leading against the market. And again, as one of those players that had really been one of the market leaders in the previous bull market. So many people thought that, again, maybe tech stocks could really start to reclaim previous lost territory and continue to lead forward, especially as a lot of them are much more cash rich versus, say, the dot-com bubble. But again, we bet our money here, and people in the Dash Report will tell you, you guys have heard me talk about it on the channel as well, that we believed that this was nothing more than a relief rally here. And if we could not get past these moving averages, at least like what we had done back here, if we started to treat these as resistance and we couldn't even get above here against the line of resistance, this was your telltale sign that this was nothing more than a relief rally and that we were likely moving lower. If the S&P 500 cannot hold this level here, if I'm not wrong, and we don't get some significant rebound here and we actually collapse through here like we're calling for, this is going to be spelling much lower price territory for the market. And last but not least here, in regards to the charts here that I want to dive through, if we take a look here at the VIX, we are still, and this is for those who may not know, the volatility index for the S&P 500 basically tracks the volatility within the options market for calls and puts. And essentially speaking, when we're seeing massive moves in the options market, this means that there is more implied volatility and more spread in the direction where price could go, usually to the downside. And as we can see, we've been setting in since as far back here as November when we had our market top, our overall all-time high valuations in equity markets. We've been still setting in higher lows here for the VIX, and each and every time coming up here towards around 33.8 points on the index. Now again, I want to emphasize when this trends higher, in the vast majority of cases, this means we are moving lower in price. There is more risk, more uncertainty about the future of equities. And as we see here, the VIX spiked up here since back on August 8th as we've been declining in the market. And this looks like it's very well on its way here, especially if it catches support here on these moving averages. If we start to continue seeing that trend higher here, we are likely coming up here at a minimum towards 33.75 points on the index here. And that is likely going to lead the Nasdaq and the S&P 500 back down to those lows and potentially even new lows here. So let's go ahead and recap some important points here. If you guys take anything away from this video, I want to emphasize here that technology is likely not going to lead in this next market cycle, especially in a high inflation, very risk-off market, especially after the kind of sugar rush back in the 2020s. And therefore, we need to have ways in order to track when tech stocks are finally getting towards proper discounted oversold territory, where they're finally starting to get back to fair value as they're not the same high growth tech companies they were before. And on top of that as well, we need to spot new market leaders, new sectors that are starting to lead against the curve, some of which may be even up during this bear market from their previous highs back around when the general stock market and Bitcoin and crypto were topping back in November of 2021. And last but not least, we need to know how to spot general oversold signs in the market to know when we can generally find a good entry point into equity markets, as this is likely not like the typical bear markets we've seen over the past decade with Fed monetary policy coming in to save it each and every time. And that is where I want to share with you guys some details about the Dash report, because these are all the topics that we've been hitting on big time here. And now we have not only been talking about for the past couple months, where if you guys would like, you can always request an additional copy of the Dash report from previous months if you guys sign up to the newsletter. But this month around, we are about to drop a newsletter, likely sometime today or tomorrow, where we're going to be diving into all of these topics, where we're going to be hitting on where we think things are heading, where we find the fair value in the market. And I want to go ahead and just emphasize how much you guys get if you sign up for the Dash report. For those of you who may not know, I switched full-time into covering crypto back in 2018. I've been trading in financial markets for the last 10 years, all self-taught. I never worked in any of the big hedge funds or anything. But what I've learned over the last 10 years is essentially we have to have a macro perspective here. So in the Dash report, you're not just getting access to my thoughts on crypto, you're getting access to my thoughts on equities, on Forex markets, and on commodities. So we're getting a full scope view of what's going on in the market. It's a 20-page report where you guys can get details on my trade setups, my articles that I write on the market, and a variety of other charts just to know where I stand on various different types of commodities and currencies. But on top of that as well, you get a whole lot more with it. You guys will get access to my coin stats portfolio, which is tracking my current existing crypto holdings. As you guys can see, we have recently moved extensively to cash here. We are back in our cash position. We've got a couple different positions here, such as EXRD or Radix, Gracevia, which is a small cap coin. And again, we're focusing on going back into a lot of these positions when the time is right. So again, this is something we don't get to share here on the channel, but you guys will get access to this as you subscribe to the Dash report. And on top of that as well, you get a ton of different features. One of the key features here is the Dash Report Alerts group. Now, we've got essentially alerts that we send out for trades, for market update recordings, where I give you guys exclusive thoughts on where I think the market is going even deeper than where we do here on the channel. And along with that as well, every time we publish a report, we started this actually back in August, I'm going to be doing an audio read-through of the Dash report, where I essentially share in detail my thoughts, emphasize some of the key points that I really want to drive across in the newsletter, maybe provide a bit more clarification outside of my core writing within the newsletter. But on top of that as well, you guys will get the trade alerts, you'll get some interesting market updates where we focus on key things here, as well as some exclusive offers here for some of our partners like Rockfin. So if you guys are interested and definitely want to keep up with my trade alerts, when I'm going into cash, when I'm getting back into crypto, that's a big feature here that we offer. And along with that, you also get to join the Dash Reports discussion group, where we've got over 750 of our most powerful members in the community that join in and converse about the market. I've gotten some of my best alpha from keeping up with some of the group members here within the Dash Report Alerts group and just getting to learn from everyone and see what they're up to in the market. But these are all the core features along with the last key one, which is our mid-month webinars. So this is where you guys will get to join in a traditional styled webinar. I'll usually talk for about 30 minutes to 40 minutes, and then I dive into answering some of the questions that you have, diving into the charts, diving into some of the things that I can share with you in regards to my opinion, sharing my updated thoughts since we published the newsletter. So it's a good break point in between the newsletter if you guys aren't up for watching those market updates in the Telegram group. But all of this comes together here for about $30 a month. And if you guys sign up for an annualized subscription to the website, you guys will get 20% off from the entire package. I think around $240 if I'm not mistaken here. So yeah, as you can see, these are the prices down here. If you guys want to go ahead and sign up for the Dash Report, understand that it's a great way to support the channel. All you got to do is go to nicholasmerton.com/dash report. I'll leave a link down below in the description. But this is, again, a great way that helps me to support creating content here, especially even here during the bear markets. And it's the best time to do so because the preparation that you take during the bear markets will propel you forward during the bull market. It's easy. It's easy to make money during a bull market. Everyone's a genius during a bull market. But if you can preserve and protect your capital, if you can avoid making the silly mistakes, many of which I've made over the past few years during bear markets, trying to pick bottoms, trying to catch a falling knife, trying to think that the bear market is absolutely over without waiting for all of the key signs to show you that the bull market is back intact, that your money and your capital is ready to be invested, that is the key thing that is going to help you separate yourself from other traders in the market. And it's the big reason why a few traders win and not many other traders win in the process. Many people end up losing money trading versus just passive investing. So if you guys want to join our group, if you guys want to support us here on the channel and gain even further insights beyond the kind of macro Monday updates we do or the normal content we do here on the channel for absolutely free, it's a great way to support us. But that being said, guys, even if you don't subscribe to the Dash Report, definitely if you can consider dropping a like. It's one of the great ways you guys can support the channel. And I hope this video proved valuable for you guys because we hit on the key talking points here that I think would be very relevant for you guys to start going out on your own journey. And again, even if you subscribe to the Dash Report, don't just take my word for it. Definitely pull from a lot of sources, learn from your own mistakes. And if you can do those things, you're going to be much better positioned than other investors and traders in the market. But that being realized, everyone, thank you all so much for watching. Thank you for giving me some time out of your day. And until the next video, I'll see you all in the next one. Take care, everyone.